Welcome to Truth, Money, and Freedom. Today is Sunday, May 26, 2019. Hey, gang, I wanted to do episode 2 of Connecting the Dots for you. And in order to do that, I thought it would be best to bring in some of Doug Casey's work. He is an economist, and he's both lauded and hated at the same time. But and I'm not going to go into who he is and everything, but he is a pretty smart man. And by the way, I'm not going to read the articles per se, but some of the ideas in the articles are what I'd like to express in this video. By the way, I will try to keep this one significantly shorter than the last one. I want to talk about wealth transfers. That's what I'm getting to. But Doug Casey is talking about this next recession slash depression that we're going into is going to be one for the record books, and I couldn't agree more. And by the way, I can bring up all the reasons, and I'll do that real quick. Number one, a record amount of debt for governments, corporations, and for individuals. We've never had this much debt before, ever. And that was, of course, brought on by all the cheap, easy money that the central banks around the world provided after, to patch up what happened in 2008, which was literally the death of our economic system. It literally died in 2008. There was no way to actually really, honest to God, fix it while keeping us in the same debt and death paradigm that we're in right now. So they papered it over just to buy us a little more time. The reason we have business cycles is because we have a central bank that prints money and controls interest rates. So that's why we have a boom and bust cycle, what we call the business cycle. And it applies to major markets, including real estate, stocks, and bonds, and other commodities as well. It has to do with malinvestment. When a central bank is printing money ad nauseum, constantly, never ending printing money, you're going to get malinvestment, and you have to clear it out from time to time. Otherwise, everything's distorted and nothing makes sense anymore. Does that sound familiar to you guys? Our current stock market, PE ratios are just out of whack. Bond market, we're in a bond market right now that's been in a bull run for over 40 years. And you heard me correctly. Our United States Treasuries market has been in a bull market for 40 years, 40. So couple that with the distortions in the stock market. The stock market should not be this high. The PE ratios are out of balance. Corporations are buying back their own stocks like crazy, and they're borrowing their fool heads off to do it. There is a lot of money sloshing around the system. I'm sure we can all agree that this economic expansion that we have quote unquote enjoyed since 2009 or 2010, I do believe they declared the recession over. It was, I think it might have been spring of 2009. So we're officially in 10 years of economic expansion, the longest one in American history. And it's been brought about by low interest rates and cheap money. And you and I, the general public, are not actually enjoying the benefits of this. The benefits are going to the 10 percenters. And that's the way it would be under a system of distortion such as this. Okay, so Casey puts forward, basically there are three good definitions for the term, and we're talking about depressions, the nature of depressions. Number one, a period of time when most people's standard of living drops significantly. Number two, a period of time when distortions and misallocations of capital are liquidated. Number three, a period of time when the business cycle climaxes. Okay, so basically these are real good definitions of depressions. So the one, and we see this all right now, the standard of living of American people, they're living beyond their means because we're borrowing from future wealth to maintain our current lifestyle. So in order for us to reset, in other words, to get rid of misallocation, our standard of living will have to drop. Now, by the way, I'm going to be as clinical as possible here. I'm not trying to scare you guys. I'm just going to let you know what a depression looks like from a guy who has actually studied the Great Depression. Okay, so number two, a period of time when distortions and misallocations of capital are liquidated. That's what our markets are right now, distortions and misallocations. So I'm going to outline it right here. And this applies to everything: housing, stocks, bonds, and just about every resource on the planet is enjoying severe distortions and misallocations due to what we call asset bubbles. There are a few exceptions to this, and that would be precious metals and cryptocurrencies. I'll get into that later. Okay, number three, a time when the business cycle climaxes. And that's basically, we're going into that period right now. So the business cycle is a very interesting thing. I don't want to get too far into it in this, but the business cycle is literally when misallocation is completely cleared out of the system and everything goes back to the mean or below the mean. That's important too. Is when the business cycle begins again. When money starts going back into businesses, commodities, whatever. So right now, there's really, I'm telling you, it wouldn't matter if I told you pink widgets, are currently, undervalued. They're in an inverse bubble. Pink widgets are so unloved right now, and everyone needs pink widgets. They don't know it, but they need it because it's what they use to make something, fertilizer. Okay, sorry about all these weird references here, but I'm just trying to help you guys understand something here. That is an asset that you want to get into. Those pink widgets are undervalued, and it's needed, for instance, for fertilizer. So if it's undervalued, that's where money needs to flow to get out of the misallocated bubble assets. For instance, stocks, bonds, real estate. So in this case, the pink widget, even though I don't like pink widgets, I think they're stupid, and I have no interest in them. I don't really understand them. But I know that they're undervalued and they're needed for fertilizer. So that's where I should be putting my money. Now, there's a reason why I'm talking about all this stuff, and I'll bring you full circle here in a little bit. But obviously, that's where silver and gold are. And that's also, arguably, that's where cryptocurrencies are too, because I do believe that Bitcoin is, as an example, is worth a whole lot more than it's trading for right now. Now, that doesn't mean it's not going to have a bumpy road getting up there, but I do believe that it's worth a lot more than they say. Precious metals, that goes without saying. Many of you, I don't need to convince of that. Silver itself, I mean, literally, like I said, there's just no better time to buy it right now because it is so unloved right now that it's actually selling for less than it takes to actually get it out of the ground and purify it to 90%. And that's not even a finished product. So it costs more than what silver's going for right now to do that. So that is a very unloved asset. Gold, is close to that. So okay, so we understand now about misallocation and basically where money flows to. Okay, so keeping that in mind, and it's very important, like I said, to understand the asset and classes, individually and when they're in bubbles. So what I want to talk to you today about a little bit is the wealth transfer. And it's a very easy mechanism. It actually happens all the time on smaller scales. But basically, when you have bubbles the size that they are right now, and bubbles in, for instance, the stock market where PE ratios no longer make any sense, in the bond market where literally it doesn't make any sense at all because inflation will rip away the value of any investment that you make in the bond market. I mean, there's just no sense in going there. That's how badly distorted the bond market is. And this is just a fact, gang. So I want to talk to you about the wealth transfer and basically how you are quote unquote shielded from it. And that's through the media. So, and this is important. And also, too, this would be, the President of the United States. This would be, the Congressional Budget Office. This would be the Federal Reserve and the media. Okay, so let's rewind the clock, gang. Let's go back to 2007. In 2007, we had a severe bubble in the housing industry. And the alternative economists knew it. And they couldn't get platforms to talk about this. That was the problem. They were being overridden by the people who were making money in those markets. So who are them? That would be Goldman Sachs, J.P. Morgan, Bank of America, Morgan Stanley, Merrill Lynch, Lehman Brothers. These were the banks that literally, once again, we've talked about this before about how banks can control government, deep state stuff, basically how corporations control media. And the information that was being conveyed by the alternative economic folk was extremely important, and it would have been literally wealth-saving information. But if you weren't on YouTube, if you weren't actually reading newsletters, there's a ton of newsletters by a ton of economists, but once again, they're not mainstream. They're not allowed to be on mainstream. When's the last time, you've seen, Harry Dent or, Peter Schiff, Doug Casey, seen them actually on mainstream media talking about this collapse that's coming? They're not allowed to. So, I mean, they literally have to either tone it down so it's so innocuous you can't understand what they're saying or where they're going with it, or they just don't show up in the media at all. Okay, so once again, taking you full circle. So the wealth transfer is when a media, like for instance, I'm going to use Cramer, Jim Cramer, convinces you that a stock is a good deal and you should go into it. And then, like an IPO, let's take one of those unicorns. Let's say Uber. Let's say that Jim Cramer said Uber was an awesome deal and everyone needs to get in. Well, Jim Cramer's working for other people, whether you want to admit that to yourself or not. And he knows that stock is overvalued, but it's his job to get people excited about it and to pile into it so that, basically the people on the inside who are already in can sell off to the quote-unquote irrational exuberance that happen because of the media portraying the stock as an excellent idea and a good value. So this so this is a microcosm. I'm talking about a very small wealth transfer. This is how rich people can get money out of, what they... Okay, this is how smart money takes the dumb money. This is how it happens, and it happens on, a regular basis. It happens all the time. Now, the wealth transfer that is coming is going to be the biggest one in history. It will see money flying out of real estate. It'll see money flying out of stocks and money out of bonds, going to undervalued assets. And this, by the way, is being covered up by the media because they keep touting this as an awesome economy. Everything's great. Everything's awesome. We know that that is not the case. We know, for instance, that corporations are closing retail stores right and left. I mean, it's at epidemic levels. In fact, this year is worse than 2008 for store closings, by far. 7,000 announced store closings so far this year. So far, it's not over yet. That's just one example. Another example is the stock market just can't go higher anymore. It just literally cannot go up anymore without fresh new money in the system or a lowering of interest rates to the point where people are comfortable borrowing money again to actually put it into the stock market. Trading on margin, that's a big problem today. The media is responsible for helping to quote unquote cattle prod the masses into bad investments. It's their job. It's the job of many people in the media to do this because they are working for the big wealthy people who want the dumb money. The smart money has found a way to get the dumb money, and that's to literally use the media to their advantage. This is how wealth transfers happen. Now, if you knew that the stock market, let's go back to June of 1929. If you knew the stock market was at its very top and it just really couldn't go any higher, you would definitely leave. Well, how is it that the richest people in the world knew to quietly leave the American stock market in June and July of 1929? Very slowly, very quietly, pull their money out. Well, that's because they understood the business cycle, and they knew that the stock market was going to collapse. But They also promoted the stock market outwardly every chance they had. So they were pulling out while they were telling everyone else to get in. Well, that's because they were topping off their profits. It was a wealth transfer. They were getting all the dumb money, and it caused a Great Depression. Well, that was part of it. There was more to it than that, I agree, but that was part of it. Well, what if I told you there's no way the stock market can go any higher without one of two things, or both? Lower interest rates and more money printing. And that's exactly what Trump is calling for right now, by the way. And he even said that we can get another 10,000 points on the Dow if we lower interest rates 1%. This is exactly the kind of thing I'm talking about, encouraging malinvestment to get the dumb money to go to the smart people. That's what's going on here, gang. And it doesn't matter if it's Trump or if it's, the Federal Reserve lies to us, 2% inflation, what a joke. 3.8% unemployment, another joke. They just lie. I don't know any other way to actually, put this forward. I know it sounds offensive when I say that President Trump lies, Congress lies, the Federal Reserve lies, but they do. This is just what they do. They're politicians. So the wealth transfer, which will come sooner or later. Like I said, we've got the longest period of expansion in human history. In American history. And that was even talked about here in this article right here, is literally been built on distortions. It's built on low interest rates and lots of new money coming into the system. This is an illusion. This whole thing, even real estate. Real estate shouldn't be this high either. Real estate should be popping any time now. It's starting to pop all over the world. It's been popping in Canada for about a year now. Australia is popping as we speak. It'll be popping in certain markets here in the United States as well. The bubble will have to pop because the way you know when housing's in a bubble is when the indigenous populations literally cannot afford those homes. They can't afford them. So at the current quote unquote market value. So that's when you know the market has to come back down again. So people aren't making enough money to even buy those homes. It's really simple. It's very simple math. Now we know that stocks are in a bubble. Now, once again, this is going by information that apparently doesn't matter anymore, which is price to earnings ratios. 13 is about a good score for your average price to earnings ratio for a stock or a share of stock. When you're getting numbers that are 20, 30, 40, 50, 60, 70, 80, they're way overvalued. But there's so much cheap, easy money sloshing around the system. It's just trying to find a home. And if it goes into stock and overvalues the stock, well, so be it. If it goes into housing and overvalues housing, so be it. Same thing with the bond market. And by the way, the bond market just literally does not make sense. It has not made sense for a long time now because inflation is 10%. And on a 10 or a 30 year, you get 2.5% a year. So you're losing 7.5% of what you could be getting if you went into something that was keeping up with inflation, i.e. gold. And that may not be on a year-to-year basis, but it definitely, if you watch it over decades, gold definitely has outpaced the S&P and the Dow. So it's definitely done better than any of the stock markets have. Gold has. That is not true with silver currently, but that is true with gold. So, okay, now like I said, bringing it full circle again and connecting the dots. The job of our politicians, our media, and our banks is to steal your money. That is their job. That's what they signed up for. That's what they do. They don't let the truth be known about the precarious situation the world economy is in. They shrug it off, and then when something happens and then a collapse starts, they say, oh geez, we didn't see that coming. Because they had all these experts on saying everything's fine, on their news programs and on their money programs, on Fox News and MSNBC and whatever. We didn't see that coming. Oh my God, how could anyone have seen that coming? Well, a lot of people saw it coming, but you wouldn't let them come on your show. You didn't let the people get to hear from people who actually have a completely different view of what's actually going on in financial markets. But here's the deal. Who did they benefit by not seeing it coming? And that was the smart money, the big money, the 10 percenters. Actually, maybe we can even go up to 5%. Those are the people who benefited by you being snowed. I mean, you were in a blizzard when you're watching the mainstream media. You don't know what's coming. You've got to start looking at alternative economists who are saying, and they're ringing the alarm bells, gang, bad things are coming. And they're coming pretty quick. The stock market itself, I'm going to say that the stock market's going to be very interesting for the next 2, 3, 4, 5, 6 months. Very, very interesting. And once again, there's a lot of reasons for the stock market to be nervous right now. You've got the trade, issue with China, which is an underlying fiat or currency war between the United States and China fighting for dominance. That's what this is. This is a pissing contest. And China will win the pissing contest. And I could give you reasons why, but we'll do that in another podcast. In the end, they're going to win. They have the gold and they have the manufacturing. They're going to go through a very bad times along with the rest of the world because they have misallocation as well. But they can pull out of it easier because they have gold and they have manufacturing. And in the United States, we don't even know if we have gold because they've been lying to us for so long about it. They haven't allowed an audit to Fort Knox since 1953. But we gave up most of our manufacturing to China. So keep this in mind, gang. And I'll link these 2 articles down below. I want you guys to understand, I mean, literally just focus on the fact that politicians and the media and the banks are going to steal your money. They're going to get it one way or another. That is their goal. That's what they do. That is their purpose, is to take your money. Oh, come on, TC. They're not all that bad. Yes, they are. Yes, they are. For instance, the Federal Reserve prints money and causes inflation. That's a hidden tax. And they're lying about how much there is. They say there's 2% when there's actually 10. 10% inflation, gang. The federal government, taxation, taking your money through taxation. The banks, well, they take it through, well, inflation definitely helps the banks too, but they take it through other means, basically fees and interest, that they charge. They all want your money. So the smartest thing to do with your money, and by the way, I am not a financial consultant. I've said that many times, but I need to say it every time. Otherwise, YouTube will, come after me with a lawsuit and wild dogs and all kinds of weird mechanisms. I am not a financial consultant. But this is how the rich people do it, gang. They put their money into unloved assets, undervalued assets. They slowly take it out of the market like they did in 1929. It was almost imperceivable that they were literally slowly selling off. They didn't want to create a panic. They wanted to make sure all their money was out before the general public knew what was going on. That's what they did. I suspect the same thing happened with our stock market. Starting in 2017, September of 2017, is when the smart money slowly started coming out of the stock market. It's gone, gang. The only reason the market's gone back up again is because corporations are borrowing money. In other words, Federal Reserve is printing money to make billions, hundreds of billions of dollars worth of loans to corporations to buy back their own stocks. That's what's lifting this market, along with people with their 401ks. But the smart money's gone, gang. It's gone. The big investors have gotten pretty much out. Now, there is still smart money in the market, but not all of it. And big people have been leaving the market, like I said, since September of 2017, and they are holding on to cash right now. So apparently, and by the way, we need to see what they're going to do with that money, and we'll see probably within the next 2 months what they're going to do with that money. But I don't want you to think that it's a good idea to stay in the stock market, because chances are we're going to be printing money, and and we're going to have lower interest rates, and the Dow's going to go up another 10,000 like Trump is saying. I'm not sure that's going to happen, gang. And if it does, it'll be because of hyperinflation, and you'll just be keeping up with inflation. Your value won't go up at all because the value of your dollar is going down at the same time the value of your stock is going up. Just keeping up with inflation. So they're trying to make the stock market modern day gold and silver. That's the purpose of gold and silver. That's the purpose it serves. Keeping up with inflation so you hold on to your wealth. So they're trying to make the stock market the new gold and silver. It will not work. It won't work because it has no value beyond, the actual stock itself. And also, you don't truly own the stocks. If you're going through a broker, a 401k, an IRA, the only way you own the stocks is if you go to the company directly and get what's called preferred stock. That's another story for another time. We'll get into that another. I know I say that a lot, gang. I come up with a lot of things when I'm talking, and sometimes I forget to go back and do videos on them. But the preferred stock versus common stock is an interesting thing, and we'll get into that another time. So, but like I said, I hope I conveyed to you very well. I'm connecting dots between politics and finance. In other words, the smart money. The smart money always wins. Always wins. You can ask any economist, alternative or mainstream economist, the smart money always wins. And they'll all tell you this. And that's because they understand the business cycle and they understand how the media is pitching for the smart money. They understand the politicians are pitching for the smart money. That Congress pitches for the smart money. I mean, this is a big club, gang, but you and I are not in it. This is about big money, big manufacturing, big corporations, big banks. It's fascism, gang. Why would they let us in the club? This is literally us against them. As far as finance goes, that is true. They are the winners in the end. They will take your money one way or another. And that's not necessarily true if you're listening to what I'm saying about misallocation into asset groups. You need to start thinking about this. This is going to become important. And I don't want, this would be a shame if like 2 years from now someone stumbled across my YouTube channel and said, oh my gosh, I really, really wish I heard this guy, back in 2019. But I'm telling, and by the way, I'm not a back up the truck kind of guy either. So it's very important you understand that. I'm not saying take your life savings out and put it into silver. I am not saying that. I'm saying you need to have some silver, some gold, some crypto, and it would be probably a pretty good idea to get some storable food as well because the inflation in groceries is going to be pretty high, and going into the next couple of years, I think. But that would be my advice. But once again, I'm helping connect dots here. I don't want to get into food right now. So I think we've covered this really well. I think it's important that we do have a basic understanding that the purpose of government and the central bank and the big banks and government in general, the purpose they have is to steal your money. That is what they live for. That is what they want. That is what they do. That's what actually keeps them going every day. That's what drives them, is stealing your money. And, I am not wrong on this, gang. Trust me on this. Once again, you have to look at it from a different point of view. You have to stop thinking Republican and Democrat. Just like, the rich people, the uber rich people, they're not Republican or Democrat. Their religion is money. Their politics is money. Whatever makes them the most money. That's, so you got to start thinking on their level. So undervalued assets. I want you guys to, I hope that this resonates with some of you guys and that you guys start talking about this at your dinner table with your spouses. Start thinking about this, at least the concept of it, because it makes sense. And this is what the rich do. And this is what the rich never tell you they do. But it's very, very well known this is exactly what they do. They always go for the undervalued assets. Money does not hang around in cash very long. It usually goes somewhere, and it's usually to the undervalued assets. And that's what's going to happen when this whole thing here, when this one that is going to be for the record books actually happens. Okay, gang, like I said, I wanted to keep this one shorter, and I've already gone on too long. Thank you very much for taking more than a few minutes to listen to Truth, Money, and Freedom. We're very, very happy to have you guys with us. We appreciate your likes and your comments, and especially when you share the videos. Remember now, we are on Discord. If you'd like to join us, just go ahead and click on the link below. Guys, have a wonderful, wonderful, wonderful Memorial Day weekend. Have some time with your family. Spend time with your family. Remember those who, have lost their lives in defense of this nation as well. All right, gang. God bless you.